I'm in conversation with a lot of the large asset locators every single day. These are pension endowment, but also sovereign wealth fund. The conversation today I'm having versus 12 months ago is night and day, both in the ways that how eagerly they engage, but also as the number of the conversations, right? 12 months ago, John, not investing in crypto is okay. Today, not investing in crypto is an active decision. They have to get signed up from the board. The board typically could say, hey, everybody else is doing this. Why are we not doing it?
GM, good morning. Welcome to the Milk Road Show, the daily crypto show that knows that it is never more over than it is right before we are so back. I'm your host, John Gillen. Today is Tuesday, October 21st, and we are joined by Matt Zhang. Matt is the founder and managing partner of Hivemind Capital Partners, a multi-strategy investment platform focused on digital assets and blockchain technology. Prior to Hivemind, he served as the global head of structured products at Citi, where he was also a founding partner of the Citi Impact Fund. Matt is one of the most influential and plugged-in investors in the entire world of digital assets. Today, we're going to cover a lot of things: venture capital in crypto, digital asset treasury companies, the outlook for Q4, and what all of this means for the market and this struggling bull run. So if that sounds good to you, make sure you like and subscribe. Share this episode with someone who's going to enjoy it. And as a reminder, we have just pushed a big update to the Milk Road portfolio. If you are a Pro All Access member at Milk Road, you've been using this portfolio for a while, but now it is much faster, much smarter. There's way more things to play with, to poke around. You can still track every move we make in our portfolio, but now you can do it with interactive charts, category breakdowns, real-time performance, and benchmarks against a bunch of different things. All Access members have access to this now, so they can go check it out. And for everyone else who has FOMO, don't worry, you can upgrade to All Access at any time and get in on the alpha there. Today's episode is brought to you by our sponsors, Figure Markets, Grow Your Cash Like a Bank, no lockups, just real returns, and Gemini Credit Card, stack Bitcoin every time you swipe, no fees, no fluff, just crypto rewards. And without further ado, welcome to the Milk Road Show. Matt Zhang, how are you?
Good. Thanks for having me, John.
I'm really excited to talk to you today. I think there's a lot of ground to cover, but I want to begin with Hivemind. You left an extremely successful career running a trading business on Wall Street to launch this fund back in 2021, and you're famous for your focus on investing in digital asset culture, in Web3 ecosystems, something that a lot of other VCs have missed and overlooked. But tell me a little bit about Hivemind. What's the unique vision behind this project, and what inspired you to launch this firm?
Yeah, look, first of all, thank you for having me on the show, John, and I'd love to spend the time and chat about everything about the markets. As mentioned, I'm the founder and managing partner of Hivemind Capital. Hivemind is a global blockchain and crypto-focused investment firm. We're headquartered in New York City. Now we have offices also in Europe and in Hong Kong. We have just over 1 billion clients' assets we manage, and you have different strategies: cross venture investing, cryptocurrency, NFTs. We also trade public equities with underlying crypto exposures. So really spanning across different type of strategies, across our platform. It started by me being a very early enthusiastic about Bitcoin. I bought my first Bitcoin around 2014, always as a personal hobby. And I decided to pursue my second life, leaving all the big Wall Street careers behind in 2021. So it's been 4 years. It's a lot of events, I would say, that happened in the last 4 years, and some good, some bad, but never had a day of regret. I love what I do. I think this industry is very, very exciting, and there's a lot to look forward to from here.
Yeah, definitely. Yeah, I appreciate that context. I did something similar. I was at BlackRock for 6 years and left to get into crypto as well. So I appreciate that and respect it a lot. So I want to ask your thoughts on this. Following the collapse of FTX and Terra Luna, VC investment into digital assets kind of flatlined for a number of years. It's only recently starting to pick back up again. What have been some of the biggest struggles to be a venture capitalist in crypto? Has AI stolen the spotlight? Have there been other issues that you faced? And do you think that the market there is beginning to turn in a more positive direction now?
Yeah. So for us to figure out if the market going to turn, let's figure out exactly what happened that lead to us today. I think there's two reasons. One is macro and one is micro. The macro problem is in the last 4 or 5 years of a cycle, the asset locators has massively overlocated to the private side. When I say private side, I meant private equities, venture investing, private credit, versus the public side, which is public equities and public debt. So all the asset locators, the pension endowments, institutional investors are supposed to maintain a well-balanced portfolio. Because of the private side, there's not much of recycling of the capital, right? There haven't been much of a DPI from the venture space, for example, that all of a sudden all the asset locators are over-indexing the private side. That means one, you're raising your venture fund. Two, you're just not going to get the asset locators to re-up your funds. So the fundraising of the VCs in general has been difficult because the asset locators doesn't have the liquidity to redeploy back into the private side. That's the overarching macro problem. The micro problem is after Luna FTX, people are really struggling to find that crypto project that's worth backing, that you're actually still trying to find ways to grow meaningful revenues, user base. And quite frankly, the problem is just way too much capital chasing too little few worthwhile crypto project, right? Together with the other side where listing of tokens are becoming a little bit more restricted, strict, with all sort of like large exchanges upping their requirement. The combination of that too just means that there hasn't been many VC investors be able to have many wins. And there hasn't been many wins in general in the crypto space anyway. So if macro, you're having asset locators are not enthusiastic redeploying into the VC funds. On the micro, you have the VC fund are struggling to find worthwhile projects to back. When you're having the two headwinds hitting together, I think that's really the problem, the crypto VCs today. How do we get out of this? And what's my view? Well, if you're going after the problem, the macro problem is going to get solved by its own. What I mean by that is the rates cut cycle has already started it. Before end of the year, we may get one cut, we may get two more cuts, but nobody's denying that we're in a rates coming down cycle. Typically, what that means is you have a lot of IPO windows opens up, you have more company going public, you're going to have more exits from a private investment into the public market. As that train starting to move, you will have the capital recycle back, and you have the asset locators went back to re-upping the next private equity fund commitment, the next venture fund commitment. So that macro problem, I'm expecting going to get solved by its own. The micro problem for me is more challenging is even the macro problem gets solved, that just means there's more people with the VC money. But are they be able to use the VC money being helpful to the founders in the crypto and also spotting the next poly market, the next hyper liquid, by the way, didn't even raise venture capital to start with. That's something I think we need to talk about. Obviously, AI has taken a lot of the mind share away from the market. AI startups attracting a lot of more capitals, but I think crypto needs to get out of the zone, not thinking about it just competing with AI. Like if we're really thinking blockchain is such a paradigm shift, changing of technologies, we should be confident to know there should be a lot of capital to be attracted for our own space, regardless what's going on in the AI space. Not to mention AI and crypto has a lot of overlapping anyway too. So I think we have to really just examine to say, hey, what are the founders and projects and space that worth backing? Number two is for you to be able to back them versus many other competitors in the VC space. Can you give the founders and the project more than just the capital? I think that's really what people need to start to think about more.
Some really helpful thoughts and perspective on that. And this is one of the reasons why I was so excited to talk to you, is that you just have this really like on the ground experience in this industry and a unique perspective as a result. I want to ask you about this administration because they have been much more positive about digital assets and trying to encourage innovation and just activity in the space again. The Genius Bill passed in Congress, the stablecoin bill, the SEC and the CFTC are working towards regulatory clarity as well. And we have the Clarity Act that's, if the government ever gets out of the shutdown, is supposed to still be under review and consideration for passage into law in Congress. How significant has this change been in helping to bring back investor interest into digital assets?
It's hugely significant. And I think most of the people are underestimating the significance here because we still had the quote unquote Biden administration hangover, right? I think all the founders, investors in the crypto space has went through such a challenging period in the last few years. And when I say challenging, I didn't really mean about markets. I'm talking about you don't really having a supporting legislation and regulatory framework to clearly define what we're allowed to do and what we're not allowed to do. I think that's really the challenging. And I think because of the hangover, what people are seeing in the last 9 months since the Trump administration, many people are still underestimating it, but we have a massive shift in the policy, almost 180 degrees. I think any single event you mentioned, Genius Act, Clarity Act, on its own is already significant enough. But I think the most significance is the sequencing of all of them happening one after another. This means that I think we have a very, very supportive SEC. We have a very supportive administration that really want to bring innovations and blockchain back to the US. And we're seeing all of that at different levels, at the founder level, at the capital level, and at the institutional level. Founder levels, a lot of the project we're thinking about migrating to Europe, to Asia. I'm seeing a lot of them coming back. Some of them are our portfolio companies. And then at the capital levels, there are locators was worrying about locating to crypto. And we're seeing them accelerating the pace in all different perspectives. You talk about ETF, ETPs, now have a lot of DATs this year. There's many ways now to get allocators be able to really getting a piece of exposure into this market. That's all coming back to the US. And on top of that, we have institutional investors that are very curious about the space, right? This is almost a topic people don't want to talk about in the boardroom. Now, almost it's a problem if you don't acknowledging and discuss actively if crypto should be part of your allocation strategy. So I think at all this level is very, very significant. I think a lot of people are still on the sideline because they still have the hangover from the last cycle. But as this cycle is starting to pan out, I'm anticipating even more innovations and capital's injection to the space. So I'm very, very bullish about this space right now.
Gotcha. Yeah, no, I appreciate that. And you're right. The confluence of all these things happening together has really amplified their impact on the market. You spoke about the attention, the focus of investment on private placements, private opportunities. But now we're starting to see, because of this regulatory shift, an influx of IPOs and crypto companies going public. I want to talk about digital asset treasury companies, but I thought I would start by just asking about your thoughts in general about how this new wave of IPOs in the crypto space has changed the market and what you think the impacts of this new, just like opportunity to do an IPO is going to be on the market.
I think public equity market as a gateway for people and investors to getting exposure in crypto not only is the most organic, is the most natural, I think it's the most scalable way, right? Because if you go to asset locators, institutional investors, you're pitching them a crypto-specific mandate. Some investors may be more enthusiastic about it than the others, but no matter what, it's a new program. You are asking them to set up. But most of these institutional investors already have a mandate today to invest in public equities. So if you actually give them crypto exposures, whether via ETP, ETF, DAT, or just purely investing in corporates like Circle, Coinbase, Bullish, Gemini's, that's the most easy way for asset allocators locating into a strategy. They're already having a long history of operating and getting the crypto exposure. So from a symbolic standpoint and from a actual capital contribution standpoint, I think having more crypto public companies going public in this cycle, going IPO, is a great way for a lot of investors now be able to find ways to expose themselves into cryptos and an easy learning curve. Once they get there, just like people started by parking their money in the BTC ETF 2 years ago, now they made the money. They're obviously thinking about how else they can do more from there. So I think it's the best first milestone, first gateway for you to be able to get a lot more into the crypto space.
Yeah, I agree. It radically opens up the public access to this asset class. So yeah, I'm appreciative of the view there. I want to talk about get your thoughts on some things about digital asset treasury companies. You've recently been involved with a new digital asset treasury company that's going to be called AVAX One, and obviously for legal reasons, that's still a lot going on there. So we don't need to get into the details on that specifically, but around digital asset treasury companies, this has been one of the most active areas in the digital asset world in 2025. Some people are saying that it's been a bubble that's burst and the hype is over. A lot of people are saying that this is really still just beginning and getting started. How are you thinking about the market opportunity in the digital asset treasury space?
I agree with both arguments. I think there was a bubble, and I think it should be bursted. But I also think we're at a very early journey of the entire movement. I think that the beauty of a free world public equity capital market like NASDAQ in the US means everybody has a good idea, can try to make something happen in a regulated, compliant way. So when you see MicroStrategy being very successful the last few years, inevitably you have other people all trying to do the same thing, which also means inevitably you have the good character, have the bad character, you have people more capable than the others to do this. Not all that's created equal. Starting from January this year, Hivemind ourselves have evaluated more than 80 DATs. and we invested more than a dozen. And then, as you mentioned, we lead one, Avex One ourselves, work with the Avalanche Foundation, which we're very, very excited about. That's just to say there's a lot of that's out there. I think today there's more than 100 kind of companies on Nasdaq, if not more, that are actually claiming they are turning themselves or have already turned themselves into a digital asset treasury company. So in the short term, when you're having this gold rush, you obviously going to have a lot of irrational behaviors, a lot of low quality, projects that just trying to make a transactional money, not with a long-term view to think about how to bring enduring value to their shareholders. So just like all of the innovative at early stage of technology shift, you're always going to have the bubble. What happened is I need to ask yourself, like, after all this up and downs, is this structure has merits? My answer to you is I think it has a lot of merits. To the degree I think in 5 years' time, you will have the Fortune 500 company, or some shape or form, a that company. That's as far as I go. I would say that today, just like 20 years ago, if your company's corporate treasury only having dollars, and your corporate treasurer of that public company think about, okay, should I diversify into euro, pounds, and yen, Chinese yuan, or gold, so I don't just taking a single sovereign currency risk. Right now, all of the Fortune 500 companies think about, okay, there's this BTC going on. Sounds like a great inflation hedge. Sounds like a very uncorrelated assets and a good store of value, see the track record, see of the performance. Should we at least allocating some of our corporate treasuries into BTC or Ethereum or Alex or something else to diversify our treasury? Not everybody's going to say yes today, but I think that is not going to everybody's heads in the next 5 years. So I think in the next 5 years, you see a lot of, if not all of the Fortune 500 companies will run a digital asset treasury. However, I would think that digital asset treasury strategy will also evolve. What today happens in digital asset treasury, which is a very simple buy and hold structure, and maybe staking it, is not what I think that's going to be in 5 years' time, which I'm more than happy to go into more details to talk about.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Did you know you can earn Bitcoin without ever buying it? That's where the Gemini Credit Card comes in. Here's how it works. Earn up to 4% back in Bitcoin on gas, transit, and rideshare, 3% on dining, 2% on groceries, and 1% on everything else. Use it just like any other credit card. And you're building a crypto portfolio at the same time. The best part, the Gemini Credit Card has no annual fee and works anywhere MasterCard is accepted. When you're approved and spend $3,000 in the first 90 days, you'll get a $200 Bitcoin bonus. Spend as usual, earn Bitcoin instead at milkroad.com/Gemini.
Yes, and that's exactly what I want to go into more details on. But first, I want to start with something you said. I know that at Hivemind, you guys have seen a lot of proposals for new digital asset treasury companies. As you said, some of them you've invested in, some of them you haven't. But I want to get your thoughts on what differentiates these companies from each other. Because just like you said, like I tried to get a number of total digital asset treasury companies for this interview, but it's changing all the time. There's so many happening that it's kind of just like the numbers expanding daily, right? So what differentiates them from each other, and what should investors be looking at when they are trying to evaluate one company versus another? Like, how do you think about this in terms of?
It's a great question. First of all, it's not financial advice, but definitely love to talk to your audience and share some thoughts, because we have a lot of thoughts, as you can tell. I would say the first thing is you cannot wrap a bad technology into a good structure and all of a sudden make it magical. It just never happens. So if your underlying cryptocurrency is never meant to be a top cryptocurrency, it's never meant to be something that here to stay. It doesn't really matter you put into ETP or ETF or corporate public companies or that, it will eventually fail. So I think the first question for the audience who are looking into investing into different debts is to say, would you be equally excited about investing the underlying cryptocurrencies without or with the debt wrapper on top of it? If the answer is no, you should stop doing it, right? That's the first thing I would say. It's almost the first principle. So get confident and comfortable with the underlying technology and the token itself. On top of that, if you wrap a token in a public equity structure, you should ask yourself the second question, which is, I could go on Coinbase or Binance and today buy the token. So if you get all of this additional hassle to actually buy the token wrapped in a public company structure, what am I getting on top of the token itself? You already know you love the token. You can go Barcelona, Ethereum, Avalanche, or BTC. But why doing this in a DAT structure? Well, you must think that by wrapping a DAT structure, it would trade higher than where the token would be trading underlying. So the question you should ask yourself is, where is the premium coming from? Right? If there's an MNAV premium, where's the premium coming from, and how sustainable the premium is going to be? It can only come from a few different places. Number one, the leadership behind the company of the DAT is going to be able to bring you the alpha. The premium comes from the leadership, or the premium going to come from the structure of the company. The company must be able to do things more than just accumulating a token that you believe will bring you the long-term premium that otherwise you wouldn't be able to get there. So again, if I just putting two things together, I would say the advice to the audience here is, if you look into buying a DAT, how to differentiate the good one from the bad ones is check the underlying token. It's something you really want to back. Check the structure of the company, of the leadership is something you actually are following. You actually have a lot of respect. They have the right background and track record, not just in crypto native way, but also know how to run a public company, which require a combination of skill sets of both TradFi and crypto. And on top of that, what is the mission and vision of the company? Are they simply buy and hold, or they do something on top of that? If you have the answer on yes or all three questions, that's a good starting point.
Very helpful and very comprehensive framework. I think that's a great place to start for everybody. And another thing I think I wanted to get your thoughts on, you mentioned that a great way to get exposure to these digital assets is to just buy them directly, right? Digital asset treasury companies are another way to do that. Another one that's become very popular, and the SEC is making more popular by forthcoming approvals, is ETPs, ETFs that allow investors to get exposure directly to these digital assets. In your mind, what differentiates these two products, and why would an investor choose to invest with a digital asset treasury company versus an ETP? And just walk us through some of those choices there.
I give you a very simple analogy for this question. You could invest in S&P 500 index. Why would so many people still want to invest in Berkshire Hathaway? If you think about the underlying, there's no difference. Berkshire Hathaway is also managing a portfolio of public stocks. They actually have a filing every quarter. You know exactly Warren is buying every quarter. But why is Berkshire Hathaway will be able to trade a value that beyond the value of the underlying stock? This is the analogy. You compare that versus the ETF. The ETF will always trade at their NAV value. By definition, that's the structure of ETF. Just like your S&P 500 index. It's always going to track an index. It have underlying portfolios, and you can probably put a tech companies and structure this as a tech index. But no matter what, it's a tracking index thing. Yet, despite this being so popular, the ETFs of Bitcoin and stuff like this, you still are able to create a special strategies for people to invest in the likes of Berkshire Hathaway, because you believe the managers behind it are good about picking the timing, picking the investment underneath, are driving values beyond just the value of the stocks themselves. That's the right analogy for that. So I would say, if the DAT do nothing more than just accumulate the tokens, it's just an ETF. But the way for that to differentiate in the medium to long run is going to think about how does Warren has made Berkshire Hathaway more valuable than simply an ETF or stock index over time. Their ability to pick the timing to buy the stock, to sell the stock, timing of the market, be able to pick the underlying structures, leveraging a lot of the Berkshire Hathaway structures, get cheap leverage. Insurance business of Berkshire Hathaway is a great way to structure the liquidity of their capital structure. They'd be able to get all the premium up front, invest in the stocks, and pay out later, right? So a lot of things should apply to that too, which is the reason why, again, as you mentioned, we couldn't shut out of the stuff going on behind the scenes, because for legal and reg reasons, for AVEX One, we'll have done a lot of thinking to say, if we're going to sponsor and lead one ourselves, it cannot just be one of the 100. We'll have to find our own unique paths. And we have this tagway to say we want to bring AVAX1 being the Berkshire Hathaway of the on-chain financial economy for exactly that reason, because we will do things more than just simply buy and staking AVAX tokens. Timing them when to buy is an art and a science, and then making sure when you buy them, how you're staking them to get you the consistent yield, which, by the way, AVAX token has one of the highest staking yields among the top 15 tokens. And on top of this, can you actually also investing and building the business simply beyond the token values that you're going to be consistently trading above the premium of the NAV? That's the right analogy between an ETF and ETP on one side versus that on the other side.
Gotcha. So what I'm hearing you saying is that there's not much difference between an ETP or a DAT if they're both just going to buy and hold. But if the digital asset treasury company is going to do some sort of business operation, some sort of additional way to generate returns, then that can be a differentiator. So I want to ask your thoughts on what some of those things are. You mentioned staking, but MicroStrategy or Strategy is perhaps the most famous and I think the first digital asset treasury company. But its stock price has been underperforming Bitcoin this year. This has got a lot of investors sort of concerned. What are some of these ways that digital asset treasury companies can work to make sure that they're driving real value to their stock to make it more attractive than just directly holding the underlying asset? And you mentioned that you think this is going to evolve over time. How do you see that progressing from where we are today to what it might look like in the future? And what's the business, I guess, that these DATs are going to do on these assets to generate that additional alpha?
Great question. I think humans have the tendency to always overestimating a trend in the short run and massive underestimating the trend in the long run. So everybody is talking about MicroStrategy not doing well this year, but they're forgetting about how well they've done over the last decade. I have a tremendous respect to Saylor from that regards, because it's easy for someone to launch a DAT this year. But having that conviction and do the hard work and grinding year in, year out for the last few years, when we've gone through FTX, Three Arrows, Lunas, all of this, that's extremely hard, and be able to continuously maintain a premium, I think is very, very, not only require a vision, but require a very extensive execution ability. And clearly the strategy guys have both. So I think first of all is you can't just judging, company's performance based on what's happened in the last 9 months, right? Like that's number one. And I would say number two is for you to really build a value beyond simply accumulating the tokens, you have to really think about what drive the value of those tokens more than just you going out and buy. How do you accrue value back to the tokens in a fundamental way? For us, using AVAX1 as example, Avalanche Chain is designed and catered for financial industries. They already onboarded so many different partnerships with the banks, asset managers, and the financial industry big players, the like of JP Morgan, the Citi, and Apollos, and the like. So it's already have the right underlying fundamental technologies to do well, to serve as the infrastructure layer of financial services industry. Beyond just purely accumulating the token and then do the simple staking and do all of the share buyback at a discount and doing the ATM and issuing a more convertible bond at a premium, which, by the way, every single debt manager tells you exactly the same. What we think really going to do in the medium long run to bring you sustainable premium is figure out a way to bring a lot of the financial companies onto the Avalanche ecosystem. You have to force adoption to happen. There is never a better time than today to force that adoption. If we be able to systematically identify cash flowing, undervalued, small, medium businesses that in the fintech space, either commercial banks, regional banks, insurance companies, reinsurance companies, payment companies that have earning between 3 to 5 times PE, real revenue business, real cash flowing business, profitable businesses. But we think their business model can be completely transformed when we bring them from off-chain to on-chain, from offline to online, not from online to on-chain. That's where the feedback loop clicks. We are planning to go and invest and acquire this type of cash flowing business. It's all in public. It's part of the press release. And then we'll bring them to the AVAX1 ecosystem and bring them to the Avalanche chain ecosystem. If they be able to increase the volume, the usage, the TVL of the Avalanche chain, not only the price over time will reflect that, which means AVAX1 will have a bigger treasury over time, But also it means all this company we either acquired, rolled up, or invested will add the enterprise value because they're profitable beyond the NAV value of the company. That enterprise value is sustainable. That's the reason why we were constantly trading above the book value. So I think I can tell you everything John, everybody else is going to tell you. Do the share buyback at a discount, issue the convertible bond at a premium, get a sell side coverage from the Wall Street banks. Time will tell how execution ability differentiated people. At least I'm the person who actually done this in the TradFi world before. But I think really what's going to differentiate us is doing this type of stuff, building a real business in the long run, to build a Berkshire Hathaway that give you the consistent, that premium via the manager selection, not just purely accumulating all the underlying assets.
So I think that that's a very helpful way of thinking about this. And I want to kind of like bring this now to, so we talked about Hivemind, we talked about the opportunities in crypto VC and capital here. We talked about ETPs, digital asset treasury companies. Now I want to talk about how these digital asset treasury companies, they do these strategies to differentiate themselves in the market. And I want to talk about how this feeds back into the ecosystem, or the asset of the ecosystem itself. You said on a recent post on X, which, by the way, if anybody's not following you on X, I highly recommend it. Matt shares a lot of great insight on there. But he said, you said, I believe that the most powerful feature a successful DAT can do for a blockchain protocol is to serve as the quote unquote buyback and burn engine and ultimately make the network deflationary. So I want you to kind of explain this a little bit to our audience and explain how this works, but then why are digital asset treasuries companies so powerful for the blockchain ecosystems and the assets themselves?
Yeah. First of all, thanks for the shout out from my Twitter handle, but I'm going to make a first confession to say I don't think I tweet enough. I'm still trying to get myself better practice there. John, you're much better, and a lot of your audience is better than I do, but I'm trying to train myself to tweet better, and then share some of the thoughts. And I really enjoy the conversation here, and I hope more people can be able to benefiting from, communicating and chatting more. The space needs that. So I'm going to try to make a habit to tweet and share more with the community. That's definitely going to happen, hopefully, over time. And I think, coming back to what I tweeted the other day regarding deflationary, discussing with many, many smart people in the space, I think, using AVAX as example, Solana as example, right? As you know, that they all have a fixed supply in the end. The token is not unlimited. There is a fixed amount of token out there. But I think that one thing we can do that differentiate it from the ink or the lab or the foundation, which by the way have a very different purposes in the ecosystem, right? Is us serving a different, differentiated sort of way to do this. We talk a lot about what we can do, rolling up fintech companies into the ecosystem. That's definitely going to be one of our focus. But by purely buying and holding the token itself, we are able to make the chain de facto deflationary because our goal is never to sell the AVAX tokens. Again, for us to achieve that, we have to figure out many other things, right? Because how would you fund for your normal operating expenses? How would you expand the businesses? But the goal for the time being, and obviously subject to everything and approvals and all of that, is we want to making sure no matter how fast and how slow we're accumulating AVAX over time, we can buy one token a day. We can buy 100 tokens a day. We can buy 10 million tokens a day. But our goal is we're never going to sell the tokens ever for what we have bought. It's accumulating one-way strategy. So I want the people in the markets to know every day they go to sleep, there's less available AVAX in the markets to buy in the open market. I think that's a very powerful reminder. If somebody be able to do that consistently on a daily basis, right? So from our standpoint, if we'll be able to go out there and then acquiring AVAX, every AVAX we acquire, we'll stake them in management. We're never going to be selling them, right? That's effectively making the token supply deflationary because every single day, there are just less and less tokens out there that are available for sale in the open market. So again, we don't know how big this thing will be. We'll do our best to make it very, very big over time, but a consistent buying and then also making this a one-way accumulating strategy will de facto making the token have less. Everything comes to our treasury, we put them away, people should forget about them, and they should view that this is not something that will ever become available for a long time, if not forever. I think that burning mechanism we served is making token less and less, and hopefully on a per token basis, the value will accruing a lot more.
Gotcha. So I want to apologize to the audience. Where Matt is, there's seems to be some sort of emergency outside, but hopefully under all those alarms, you can still hear that alpha about how these digital asset treasury companies are going to act as a way to bring in and then lock in a lot of economic energy and capital into these ecosystems and into the underlying assets. So yeah, really, really helpful insight on that. And I'm excited to see how these digital asset treasury companies start to act as that sort of feedback loop, that economic flywheel, to really power a lot more of these blockchain ecosystems. So you spoke a little bit about, we're coming up on time here, so I want to get your thoughts on Q4 and the market outlook. Mm-hmm. But you spoke a little bit about how digital asset treasury companies are going to, be a niche for a while, but we're moving towards a place where basically every Fortune 500 company, you said, is going to have some version of a digital asset treasury company. What does that trajectory look like to you from where we are now to that endpoint? And yeah, just walk us through how you see this niche in the market evolving over time.
Yeah, apologize for the background noise. Its benefit is sitting in the center of New York City. I mean, this is just like what you eat for lunch. Hope you guys.
I have the same problem. I'm on the Lower East Side. It happens to me all the time too.
Yeah, but look, I'm extremely bullish about the market, both in the short run and in the medium run, which is very controversial and contradictory from many other people's view. I think 2 weeks ago, we obviously have this great crush. People are still trying to find ways about what happened. Every time something like this happens, people can't really figure them out. There's always a lot of conspiracy theories. What happened, right? But I think over time, people have to realizing there's not so many conspiracy theories. There's not so many romantic stories out there. Like things just happen. There's so many contributing factors to the market dynamics. In the end, we have to get better about risk managing, investing, trading ourselves, and stop blaming the market because everything happens for a reason. That there's not so many conspiracy theories out there. I think that the result of the crash and all of this means like a lot of the leverage are completely flush out from the ecosystem. Like if you're looking for open interest, the leverage outright, where the skills are on option market, everything pointed towards that right now, people who are still holding the tokens probably has hold the tokens for a very long period of time and probably hold it for a very long period of time. So I'm a very simple math guy. There's a demand and there's supply. There's no more selling. There's only one way it's going to go, right? But I do want to remind the folks here is I think what happened last 2 weeks ago, it just means that the liquidity of the market may be in a different flux point. That may take a little bit more time to repair the liquidity. So you're probably going to see the price jumpier than before, just because you probably still need a bit of a time to restore the confidence to the market maker, the exchange, the players to come back to the same size because everybody going to have this hangover back of their mind. But in terms of the bullishness, I think whoever needs to sell already sold. I think that the shutdown going to finish at some point soon. I think that you will have a couple more prints on CPIs and stuff, nothing controversial, and we will resume the track of the rates cuts. After all, crypto is a risky asset. So I think when the rates goes from 4% to 2%, I think crypto is headed for a very, very good run. And I also want to tell something to the audience, which a lot of the investors on the other side listening probably not privileged as I am. I'm in conversation with a lot of the large asset locators every single day. These are pension endowment, but also sovereign wealth fund. The conversation today I'm having versus 12 months ago is night and day, both in the ways that how eagerly they engage, but also as the number of the conversations, right? 12 months ago, John, not investing in crypto is okay. Today, not investing in crypto is an active decision. They have to get signed up from the board. The board typically could say, hey, everybody else is doing this. Why are we not doing it? There is no room to say, oh, it's okay. We'll just wait and see what happens. Like wait and see what happens is becoming to say a no. So I think that pressure is on for everyone, right? So I think that I leave the rest for the audience to judge. I just think that when you're having such a big force coming in, pushing the market to one directions, I think you just have to have the ability to take outside of ignoring all of the noise and, don't take leverage, risk manage, be optimistic in the medium run, and knowing that we're in a transformative stage of something which is very well worth preserving. And I think blockchain is great. So there's a lot for us looking forward to for Q4 and rest of 2026.
Lots of great wisdom in there, and I appreciate the view on the market for Q4. I think that there's a lot of retail investors who, like you said, don't have that transparency into these conversations with institutional allocators, with serious capital, and how much that conversation has shifted recently. And at the beginning, I said you're one of the most well-informed, plugged-in investors in digital assets right now. What are some of the other opportunities that you're seeing in the market that most investors, especially retail investors, are missing, are overlooking? What are you most focused on going into the end of this year?
I actually think for the retail investor in particular, if I'm them, I'm thinking about not only what's most interesting, but also what's most interesting plus that I can easily access. Because we can keep sitting here talking about what's interesting, but in the end, if that's an instrument that retail investors and people can't get hold of, all bets off, right? So from that perspective, I think what I would say is definitely spend more time in the public equity market, right? As I mentioned earlier, the rate cycle going to come down, IPO window opens up. Every single company in some shape or form, I'm hoping, will transform from an online company into an on-chain company. You see what Stripe is doing regarding launching Temple, a new layer one. I think a lot of fintech companies that were in the Web 2, or not even fintech companies, just payment companies, just financial services companies, they're all going to be able to bring you some kind of crypto exposure in a very unique and different way. So I would say to our communities and audience out there is do your homework, remain curious, study the public equity market. Every single day, there will be companies that adopting a crypto strategy, a blockchain initiative. I think they're going to, one way or another, transform themselves into a crypto company somehow. Now, if combining that with the underlying robust business that's already profitable, cash flowing, that's a great way for you to get crypto exposures. Getting crypto exposure doesn't really just mean that you buy BTC and ETH and Solana and hold them. Doesn't mean that you can just find the next category defining party market, which is very hard for a lot of retail investors because they don't have the abilities to access those deals that early on. But they don't have to. Public equity market is transparent, a very, very high bar for disclosure. You kind of on the same playing field than many other institutional investors. Stay curious. You'll probably have an edge versus the large pension endowment fund because you already know crypto very, very well. Use that in your edge. Go and figure out what companies, what sectors are violently, aggressively giving themselves a digital asset flavor transformation, and then figure out if there's any interesting market opportunities out there. That would be my advice to the audience.
So it's about understanding what your goal is as an investor, and then making sure that you are evaluating all of the opportunities that are available to you and looking at ways that you can get allocated to participate in this. Yeah, really, really helpful perspective on that. I want to sneak in one more question here on this.
Sure.
A lot of investors, especially after this crash, have been saying that we may have topped, that the just like you said, like it's going to take a little bit to build up investor confidence and for liquidity to come back. What are you looking for in Q4 here as the next catalyst for not only Bitcoin, but for the broader digital asset market? Do you think it's going to be a trade deal with China? Do you think it's going to be the end of quantitative tightening? Like, what are you watching on the horizon in the markets in Q4 that you think is going to kick off the next leg of the digital asset bull run?
Yeah. First of all, for whoever says the market has stopped, I'm just going to do one thing, ask them to zoom up the chart for the last 11, 15 years. Okay. Every single time it's a top, it has not topped. So again, I don't know if this time it's topped. All I can tell you is that from a statistics standpoint, I know which side I'm on. So until I see any other evidence, I would say that you have a normal volatilities. Crypto volatility is always exaggerated. Every single time it's going to be different. But I've seen that we're top for so many times, even just in the 4-year period, the high money been operating. So not worry about that. I think from here, quantitative easing, Middle East, Russia conflict, inflation pressures, geopolitics, China, tariff, all of the stuff you mentioned are the right catalyst for the market to do better from here. But I would say that there's like a very, very big catalyst in the room, which is don't forget that under Trump administration, with SEC, CFTC, with Clarity Act coming in, all of this, forget about everything else. Like we're set up for the market to do well from a structural standpoint. The government, the president, and the regulators would love you to do more in the space. I don't know what a stronger message to encouraging people to try either build something or invest something in the space, right? So I think none of us are going to be geopolitics journalists or, someone is an expert knowing the Middle Eastern conflict and stuff like that, what's going to get solved. But I think we have to take a lot of things for granted, saying these are things we can't change. But I think there's things that people are often ignoring, but actually pretty meaningful. Is we have a very, very supporting legislation, which, by the way, going to happen for at least another 2.5 years, 3 years. So I think from that perspective, that's just, you have to zoom out and really understand that we are setting up for a very, very good market environment to do that. So I think in the short run, everything you mentioned are the short-term catalysts. In the medium-term catalyst, I think all of them think that really matters. Like, do you have a very supporting regulator, legislator, and governments that's supporting this industry? And I think we do. So from that perspective, I think that's really the biggest catalyst for us to continue to do very well.
Matt, I really appreciate you coming on the show today. I feel like I learned a lot. Our audience, I think, is going to love this conversation. So thanks for being here. Where can we send people to find more of you and your work online?
Yeah, sure. Of course. Happy to please follow me on Twitter. As I said, I'm trying to get better about tweeting more and sharing more thoughts. I'm also, occasionally active on LinkedIn, so definitely follow me there. I will try to read as many messages as I can, but apologize if I won't be able to respond every single one. Go to Hivemind.capital, our website. There's a lot of good information talking about the fund, our strategies, our approach, and you can meet the wider team there. And hopefully I will see a lot of your audience in the next events. Next events I'm going is the SOP conference, the first inaugural conference in London. So I'm going to spend a few days over there. So hit me up if you're around, and love to see many of you.
Matt, thanks so much for being here again. I really appreciated having you on, and I look forward to our next conversation. So thanks for being here, Matt.
Likewise. Thank you so much, John.
Thank you. And thank you all for joining us. I hope that you all learned a lot. I know I did. So until next time, stay safe, stay bullish, and we will see you all on the next episode of The Milk Road Show. Thanks, everyone.
On-chain betting only lets you bet on one event. Boring. SXBet changes that. Parlay bets, boost payouts, no fees, straight from your wallet. Go to sx.bet now to get your slice of the $50,000 parlay launch tournament. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.